Good evening, everybody. This is Johnny Seville, and this is your executive summary for stock setups for the 18th of October. And of course, the S&P 500 is currently sitting right on this kind of very ever important support line, which we talked about last week. We're just bouncing back and forth, and the money flow certainly still looks like it's headed in the negative direction. We can have a look at the corporate high yield bonds. You can see those are flattening out, but money flow is dropping. And of course, a quick look at the Dow Jones Global Index. You can see that's kind of in the same scenario, right? Bouncing off this support at 315, but yet underneath the moving averages. Now, currently the overseas markets are up, and the Dow futures are up also. So you can see we've got a 10-point upside on the S&P futures, but as we can see in last week, we had a lot of that oscillating back and forth before market opening, which basically very quickly faded. Most of the rallies we're seeing so far are fading, so my bias is still to the short side. Now, having a look at some of the key things to note going forward, Rambus, that short we talked about as a continuation trade, of course, that is very close to breaking its entry point of $11.57. We talked about the $12 January puts being the way we'd like to play that. SFLY is doing extremely well. That's, of course, had another down day upon down day upon down day. The $45 January puts are now 41% higher in price than when we alerted them at. So that's a nice win so far for those of you who've taken the SFLY trade. XYL also doing very well. That's broken down, and as you can see, is holding beneath its resistance zone, and the moving averages are acting really, really well for XYL also. Next one in the entry. URI, United Rentals. This one hit its entry criteria on Monday, rallied up and retested the resistance from beneath. We'll see where that goes today. That'll likely pop up to around 78, possibly, if it's going to test the moving averages, but we wouldn't want to see it break much above that. EZA. Also, of course, that one, of course, hit its entry criteria on Thursday last week. That's still holding beneath its resistance, and that's the short on South Africa, which we talked about in Trading Room the other week. Another notable mention, RESI. That's been beautiful. Of course, that was those. Let's have a look here. 3.42% decline on Monday, and below the moving average 100-day, and the $10 November puts now traded as high as 50 cents, which is 66.67% higher from the entry alert. So that one's doing well as well, and we can hope to see that continue. RESI could be another really exciting real estate play. And Jack in the Box. Jack in the Box, as you can see, we talked about the Trading Room being this kind of head and shoulder pattern. And this is holding really, really well. As you can see, the head and shoulder, very, very bearish candles on the closes over the last few days, and that's looking quite positive. So Jack in the Box still looking great. And of course, the last one to mention, Lulu, again, broke that support that we thought was possibly going to be a test at the 61.8% Fibonacci, and just went straight through it. So again, another 3% decline in trading on Monday. The October $75 puts now up to over 464% from the entry criteria. So this one is just continuing to push and going lower and lower and lower. So that's very positive from that perspective. Now, in terms of, we're not getting too aggressive in any kind of new trades at the moment. We've obviously got UVXY in play, quite a few that are close to being triggered. A lot of those big one plays as well, of course. Excuse me. But one worth mentioning that I've had my eye on and actually reviewed with a student over the weekend. I wanted to mention JNPR. A special note out to Kirk. If you're watching this one, I think you're in this one. JNPR. This one looks quite interesting from a perspective that it's long term. In a kind of upward channel that it's now starting to break down from, just crudely drawn. You can see that upward channel there. Now, with this potential trade, I'd be looking for a breakdown below 22.37. I'd be looking for a stop loss at 22.57. So there's 20 cents of risk there. The first target would be 21.13. but this could potentially break significantly lower if this really starts to collect steam and could get all the way down into this kind of $16 range and so forth. So I would treat it as a momentum trade for the longer term opportunity. And for that, I would be looking at the $22 January puts. So that's it for tonight. Again, we want to stay fairly at least to give it the day to see how things kind of transpire, to see where this market fades and breaks through this support. If it breaks through the underneath support and breaks a new low to either today or tomorrow, then we're really set for lower levels. And we'll have a very exciting trading room tonight. We'll be breaking down all these potential trades. So keep the powder dry. One last mention. Also, the one long that does look fairly exciting, which of course has already triggered though, was CPSI. This one is quite interesting. This has kind of broken through the 50-day moving average at $26. So this may have a chance here. I'm going to be watching this one closely today as well. So yeah, so that's it for today, and we'll be seeing you all in the trading room this evening. Happy trading.